Well, as promised, to wrap up the MK Confluence for us, we have Dhananjay Sinha and Krishna Kumar Karwa joining in. Gentlemen, thank you once again for taking the time out and speaking to us. Mr. Karwa, I want to start with you. How has the confluence shaped up, and what was the most important and most enlightening conversation according to you?
Thank you very much. The confluence has shaped up excellent. I mean, the response from corporates as well as from the clients across segments has been phenomenal. They have been very, very happy with the number of companies that they have been able to meet across market caps and the inputs that the clients have been able to get from various corporates on the way forward in terms of expectations for the next 12 to 18 months as far as the domestic economy is concerned has been very useful. And the key takeaways according to the various companies that we have interacted with and also with the various investors. One is that the investors themselves are open to looking and evaluating newer and newer ideas. There is a lot of positive sentiment which is flowing amongst the investors, and they are looking for new ideas to explore and to invest in. As far as corporate response, as far as domestic India is concerned, the expectations that yes, the economy, rural economy still needs some more time to pick up. So maybe the second half should be the one where you should see a positive pickup. That's the key takeaway that we can take from the conference.
Krishna, hi, good afternoon. Since you had both domestic and assuming foreign investors, the feedback from domestic investors in particular, because all through this month we have seen large DII selling. I know some of this is driven by LIC, but what's been the feedback of the domestic investors in terms of the domestic buying missing at these levels?
See, clearly, I mean, domestic investors are looking at valuations and versus that the earning, I mean, the valuations and this thing. So the question that investors have been evaluating is that, okay, we have had a very good run, but to invest new money now at these levels, so they are looking at, they're very, very cognizant that earnings have to still pick up, and which will possibly take a few quarters. So I think that is the key question that investors or domestic investors are careful about. But as far as flows are concerned, as far as the mutual fund industry is concerned, they continue to have robust domestic inflows, and investors are very positive on the opportunity going forward. So we are not seeing any feedbacks on any redemptions or that kind of a position.
Okay, well, the stock that's really flying away right now is SBI. What a mood change it's been on this stock ever since its numbers. It's almost inching towards a 5% gain now, 4.5%, and big moves just in the last half an hour. Dhananjay Sinha is also with us. Dhananjay, wanted to ask you about this because this is clearly the theme of the last couple of days, and you guys did have some financials speaking, some companies speaking at your confluence. On SBI itself, how much do you think the merger could bring about for the company itself, and on PSU banks, what's your view now?
So I think, with respect to the PSU banks, generally our view has been recapitalization, etc., is still a structural issue which needs to be addressed. And so while that is there from a business standpoint, the credit growth is still fairly moderate. I think they're still lagging behind in terms of market share. I think there has been certain optimism in the banking stocks, especially the PSU banks, largely on the back of the fact that the yields have actually come off quite significantly over the past 3-4 months, and that has been feeding into a sort of feel-good factor for the PSU banks in general. And there is certain actions with respect to mergers and consolidation in the SBI group. So I think that is also, induced certain amount of excitement. And I think the guidance from SBI on asset quality also seem to be, reinforcing that view. So I think that's generally the view that's coming on the PSU banking side. I would say that, we still sort of focus a lot on potential to grow, the positioning to grow, etc. And the earnings that can be, earnings on assets is something that we are focused on. And this is a place where we think, the private sector banks are definitely leading on that. And even if you consider a sort of improvement in credit growth, I think some of the private sector banks will lead that growth. So I think we are still focused on that. You know, we had identified Yes Bank, ICICI Bank as some of the banks that could actually do well. So that generally has been doing well. So we are sort of sticking on to that view. SBI of the PSU banking space possibly is somewhat better.
No, just talking about just talking about SBI.
So
just hold on, Dhananjay. I'll just come back to you since the stock is surging. You know, the point that I made last Friday, Sonia, was on in the F&O market. You're seeing a lot of build up. You now have 10 crore shares built up in the open interest for SBI. That's 2,500 crores. Why is that happening for SBI? Is because of the scarcity premium. Because if you see the float for SBI now, there's only 8% float available. Government has 61%. Domestic institutional investors have 20%. FIIs have 9%, and corporate have 2%. Only 8% float is available, and that is after having seen years of underperformance, that's seeking its pound of flesh, and that's why a lot of this move is taking place in the F&O market as well, and that's where you've seen 9 crore shares open interest build up. Dhananjay, the other space that I want your feedback on, especially from investor point of view, is on a stock like Infosys. Today in the morning it opened up, but again has sold off, and it's at 52-week low while the market is at 52-week high. What do you make of that dichotomy? Because still about 2 or 3 months back, it was a leadership stock.
Yeah, I think 2-3 months back, as far as Infosys is concerned, I think there was a turnaround that people were factoring in, and you know, the change in leadership over there and the change in strategy, all those things were actually reflected in some of the earnings number. I think the guidance have sort of mellowed in the last quarter, and I think the stock price is actually corrected on the back of that, and I think there has been a cautious view that has emanated from most of the leading IT companies, and you had this whole Brexit thing that is also inducing certain amount of uncertainty. So I think the concern on revenue guidance is something that people are looking at, and you know, the possibility of moderation in margins is something that investors also you know, considering as a risk factor for these companies. We will have to see how long does it persist, but it appears that till the time, you know, this whole European thing you know, clears up as far as markets concerns are concerned, I think there will be certain pressure on the stocks. I think after a few quarters you might actually see people looking at value you know, after a period of sort of consolidation.
Sure.
That one can expect.
Then, Krishna, I wanted to ask you a little bit more about the comment you made earlier where you said that investors at the confluence were interested in entering into new spaces or investing into sort of new arenas. In your assessment, where are the pockets that there's still value now and one can perhaps increase their holdings?
See, as far as the mid-market segment is concerned, I think it's more a question of valuations, or rather individual stocks and how they are valued at. I think that is what the way it works. So because otherwise on a segmental basis, I mean, it's very difficult to look at mid-market companies or on a segmental basis. So that's where it starts from. But I think what I had mentioned last time also when I had come on air is that investors are now getting used to the fact that if you're in a lower interest rate environment, then your return expectations from individual stocks or portfolios that should also be tempered with, and also the return expectations from the corporates themselves, that also should be tempered with, and plus in a lower inflationary environment the top line growth will not look as robust as we are used to. So I think the whole investor sentiment now is to evaluate the same companies in a different way and look at whether they are still affording you a decent return. So that's the key takeaway that I can see that the consensus is moving towards resetting the bar.
Okay, Dhananjay and Krishna, thanks a lot for your time today, and thanks a lot for joining us